Hello. Are you able to hear now?
Yes, sir. I can
Okay.
able to hear you.
Now I'll just try to, you can see the screen also, right?
Yeah, the screen is black now.
No, I will just check.
Okay.
Is coming?
No.
Now it is coming?
No, sir. Not coming. Yes, now loading screen sharing. This takes 30 seconds.
Okay, so it is now coming?
No, sir. The loading screen sharing. Yes, sir. It's coming now.
It will come because there is always a lag because this is on sharing. And transferring of the image, right? That's why. Okay, so it's come now.
Yeah.
Okay. So now we'll take one chart at one particular point and just, first I'll just explain the terminology. Okay?
Yes. Okay.
Just hold on.
Okay, sir.
Hello.
Hello, sir.
Okay, let's take out of DLF.
Yeah.
Okay, this is R. First I'll just explain terminology. R means resistance for a day based on daily chart for the day 140 and 147. Okay. CP is the equilibrium price of yesterday based on yesterday's price movement. So below the CP you will have a downside bias of the stock. Above CP it is the upside. S is the likely lower range for the day, that is support may find over there. So there are two supports and two resistance. R has 2 ones and support has 126 and 135. Okay.
Yeah.
Then RSSL and RBS. These are basically required for the re-entry signals. Now re-entry signals are the orange down arrow sell signal, and blue color, small blue color arrows are the re-entry buy signal.
Those blue colored dots.
Small, where my mouse is there right now.
Yeah.
So re-entry buy signals. Okay. So now when re-entry buy signal is there, you have to take RBSL as a stop loss. Whenever there is a re-entry buy signal, and whenever there is a re-entry sell signal, you have to take RSSL as a stop loss. Whatever will be at that time, each bar is of 5 minutes and will shift after the completion of the 5 minutes. Keep sideways or to the right. Okay, the signal will get confirmed only when the bar shifts to the right. Okay, at that time you can immediately execute with RSSL as a stop to sell. Okay, now big arrow is the main signal of buy signal, and red arrow is the main signal of buy signal, and the red color flowing line is the filter line, which we say that any buy signal below the filter line we will avoid. Any buy signal below the filter line as a basic rule will avoid signals. The green ones below the red color flowing filter line, and we will do sell signals below the filter line. Whatever sell signals are coming, that we will try to implement. This is a basic rule for us. Then come back again to the BP is the buy price. That means in this chart of DLF, when the green arrow, that time the buy price was 133.55. The same you will see over here at that time. Okay, and OBSL is the stop loss, original buy stop loss when the green arrow came. Okay, that time the stop loss would have been 131.27. Okay, then we have this on the upper section is H, that is the running market, what is the high for the day, running market low for the day. L means low, running market low for the day. BT means buy target. For this buy signal which was generated, the targets were 135.80, 3 targets are there, 136 and 138 point to the targets that time. Okay, ONG open, morning opening of the day. Now CBSL, current buy stop loss, CSSL, current sell stop loss. Now if these two levels which are there, changes the signal from green up arrow to red down arrow. Okay, now the preceding signal is down, so therefore CSSL will be applicable. 133.71. So if the price goes above 133.72 or 75 on the 5 minutes closing bar, then you will have a green up arrow. In case and vice versa.
I cannot understand.
So see, last signal is red arrow.
Yeah.
That is down signal, that is sell signal in DLF chart. Okay. Now if DLF has to show a buy signal or an up arrow, green up arrow, then it will come about CSSL, that is 133.7175.
Okay.
Okay, is the price?
I'm telling you, at current chart, suppose we entered a DLF at the green signal.
Signal actually in the rule, we will not take it. Now the signals will come. There is an alternate signal. After red, down arrow, there will be a green arrow. After every green arrow, there will be a red arrow. Next will be. There will be alternate of signals. So therefore, we have a filter line as I mentioned to you. This is the red line, trend line. So any signal below the trend line, that is a green up, we will not do it. Assume you have done it for whatever reason. We have done it. Okay. Hello.
Okay.
Assume you have done it, and the price somewhere about 133, say 133.50, so 33.80 or something you might have implemented. Okay, we were looking at the target of 35.80 and 36.75. So high made was in this case was 37.25. So if the target was attained and the spike, okay, now what happens as per this thing is that whenever first target attained and two target, this is meant for 3 lots, but in stock feature we cannot do 3 lots. So what we suggest is that anything at first target or above, or in front of you is the stock king. You are seeing a spike and the target, if you are fed at 136, 30 or 36, then trade is complete. So you have taken profit and you are out of the trade. Okay. If you are doing a single lot, so there is no need to wait because we don't know if third lot doesn't come and the stop loss gets. So if target is attained, chapter close, you have to close the trade completely. So don't think whether, like suppose you are doing a single lot, so you have exited at first and second lot in that first and second target zone. You have exited, completed chapter close, even if it has gone for
I am trading in one lot.
so anything at first target or above, you have to exit. Okay, so there is no issue whether third target is attained or not attained. Okay, so now suppose if by chance you have not done it, so after the high was made and you have not done it, that time whatever will be the RBSL, that time you can maintain that as a tight stop loss. So in this case, I'm just taking the data window on the side because the old data you will not see now. Open one data window and kept my mouse on the highest bar of 137.25 of the 5 minutes, and left hand side you might have seen one data window box opening up. Okay.
Yeah.
Window, if I see the RBSL, that was 131.85. Okay, that 85. In every bar it will keep changing. As I shift to the next bar further, now it RBSL has become 130, and as further if I shift, RBSL has become 133.55. So if you have not taken profit, then you should look at RBSL as to cut. Our objective is to minimize loss. We don't want to try to keep the loss minimum as possible. So in case if you have not taken profit, then see to it that you maintain RBSL as the stop loss. Don't wait for CBSL, because CBSL will be sometimes very far off and you may get into loss even if the trade was profitable at one point. Okay. So CBSL, if you see over there, was at 131.37 CBSL. Where my mouse is there, that time the CBSL was 131.37. Okay. Now as rule, we are saying that okay, try to avoid the buy signals, but sometimes you may get good moves on the buy signals below the average line. So I will tell you the advanced rule later, but right now the basic rule suggests that avoid all buy signals below the red color trend line which is going on. Okay, so what happens is the market is in complete downtrend. Signal when the market is in complete downtrend on intraday also, that you don't land up buying, and if you are not able to buy, you don't land up actually getting trapped. So you are only on one direction because the trend line is below, so you know you will have to look for sell signal only. Okay, so suppose now in this case, as we say, come down a little bit, SP. Okay, SP is the sell price. So when the red comes, what is the sell price? 131.25 is the sell price.
Yeah.
So that is a sell price. In that time my stop loss was OSSL, that is 133.85. Okay. Okay. Now re-entry signals will always come if there is a main red signal already come before it. Then only you will have these re-entry cells. Otherwise it will not.
Okay.
Okay. Now this cell signal were there, and now we can here the target that time was 128.30, 127, and 125. So it is over. So the low made during was 130. So after that there was not much fall over here. Now what happened in the morning, there were at opening there was a sell signal in DLF. Okay, if you see over there that time, what is the scenario? We check that when this morning at market opened 9:20, there was a sell signal that time, but the market had moved up with a gap down. Now if I notice my CSSL at the price of 133.40, CSSL was 137.80,
Yeah.
and RBSL was 136.80. Now there was a gap down, therefore the risk is higher. So in the morning sometimes we will not, from our SMS point of view, we will not give a sell signal. Sometimes this might be the best performing signal also, because now if I am maintaining my sheet, we try to see that our sheet is also positive, try to maintain a positive sheet. Okay, our signals will come, but when we are giving from a trader's angle who is watching also, we suggest see the stop loss difference which is there. Sometimes it may happen that the stop loss would have been somewhere about 136 RSSL, 137.70. Okay, and the whole day that stop loss did not get violated, and in the end at closing you could have made still a profit. Okay, but the risk, we also highlight the risk part, because it's a 7 rupees, 8 rupees risk. So you have to understand the risk and then implement. Now from our angle SMS we don't send, but those who are watching the screen and if they want to do it, what they can do is that they can try with the stop loss of RSSL and enter the trade. Okay, and that time our support level, you can try support level and the target. So that time my sell target was 127, 126, 45 and 121. Lowest was made was 129. So that time my target, which was first target, would have been 27. That also was not attained. Okay, because the stop loss was very far. Now what happens once you implement the trade, as the price, you implemented the trade, okay, sell was happened and you enter the trade. But as the price moves forward, which is there will always drop down. That is when actually the support of the sell price was triggering. That is 132.85. That time the sell price was 132.85. Okay, when the actual sell was triggering, if I notice that over here at 9:55, it was about to trigger. That time my RSSL was 134.90.
Yeah.
So that time is within the risk is now smaller. So if once the people who are watching the screen and doing, they can trade also, because stop loss is now reasonable and my target which we are setting also is slightly lower. And if I look at my supports for the day is 127 and 132, so 26. Okay, I might go for the trade in that case, because I might still get say about 3 rupees for the target was not attained, but I could have been out getting some profit. But as I made a low of 130, RSSL comes down 132. Okay, as I move up, my RSSL comes down to 131.45. Okay, and my trade completed at 130, 131, 31 around that area. So even if you are entering the trade after the signal late, like after the sell price, you will always track the RSSL to go with the trade at the point of entry. Once you take a trade, look for RSSL very tight stop loss, because the signal at this point will change only when CSSL is crossed, and CSSL got crossed was 136. That also keeps changing every bar. CSSL got crossed over here when the green arrow came. So that time 130 to 72 was the CSSL, and you see in this particular 5 minutes bar at 12:25, it spiked to 133.
Yeah.
Okay, so this was actually buy signal. So even if you enter the trade, so that from SMS point of view we don't give because the risk is okay. But when you are watching it, you know the risk very well in your hand. The person who is getting SMS does not know the risk, is not watching it. Okay, we are doing the watch. Trade with, so we are slightly cautious sometimes, slightly aggressive sometimes to take the call. Like say in the bank nifty screen watching. We were discussing and whether to give or not because of 40-point stop loss. So we said avoid it, but to avoid it, but that happened to be the best performing signal. And then 40 points you could have not on the downside. So sometimes we have to take chances, sometimes we have to become conservative to take the signals. Now but those who are watching, they will have to have every bar to bar monitoring is, bar to bar support is there. Help is there of the chart to know what is the stop loss, you know what is the running stop loss, current stop loss, everything information is there with you in your hand, in front of your eyes. Okay, so what happens, the decision and trading will be much more better than what actually SMS will come, because we have to be, we have to balance our sheet from that angle, we have to see that risk is not that much and balance everything and try to send an SMS. But those who are watching the screen completely, they have a lot of advantage of doing the screen because everything is done. You don't have to do any analysis. You just have to all the analysis is built in the signals. So you don't have to do, you watch and trade. Okay, when the signal comes, you have to trade. So this is as far as the DLF chart is concerned. And the red color dot, the buy signal came, but it was below, we did not do. But somebody who had done it, for example, understanding the risk, then red dot has come. Red dot also indicates there is a profit booking alert. So if you see over here, I'll just take it slightly behind. If you see over here, there was a red dot on top when the prices were this. So if sometimes what happens, you have to remember that when there is a big buy signal like this, and immediately dot comes, you may become cautious. We have to be cautious. So sometimes this buy signal we will not give because we are immediately running into the profit booking signal. But sometimes these profit booking signals run for some time and it keeps falling down. Okay, so there is or rising up. So red color dots are profit booking for buy positions. Blue color dots as shown in the ICICI Bank chart or its Bharti Airtel chart. Blue color dots are profit bookings alerts. Alert basically. So somebody, our exit has to be there in time. So that is why these alerts are there. So entry and alerts can be put, entry and exit can be of different ways. Entry will be in green up arrow. Exit can become at the target or at the resistance R that is shown. Okay, or if you are trailing it, then RSSL when you are trailing it, RBSL, sorry, for a buy position, and then when actually it reverses. So our buy signal will come, but sometimes exit, if you depend completely on the signal exit, then you may lose a lot of profit sometimes. So therefore, entry is as per the signal, exits are as per the target or as per the profit booking alerts, or as per the running and trailing stop loss, which is RBSL for buy and RSSL for sell. Okay, so that you don't, sometimes the profits are not lost. But on SMS, we have to stick by the stop loss and we have to stick by the target. Because we can't keep sending messages again and again for everything. But our calls are based on this. So now, just to add further, black color bar are the trended bars. Black color bars are the trend down. So we have showed a trend. My mouse I'm scrolling. Trended. So red color is shown. So that you know that's the down trend. And the red color bars which are shown indicate sluggish movements that time in that time frame and sideways behavior. So any signal coming on red color bars. Now let's take an example in the Tata Steel chart.
Yeah.
Now if you see the Tata Steel chart today, after morning market opened around this time, around 9:20, this price was about 272. So Tata Steel actually was very flat, full So even if the signals came, or even if the signal ended at some point when it was a trended part, like the signal when the message was sent was on this particular bar at 11:10, and the sell was given. Okay.
Okay.
So later on, then I had sometimes intervene and try to see that cut the calls when I feel that okay, this might lose slightly. I intervened and told my person to cut Tata Steel call in loss profit, whatever it is, because the market was, I felt that might pull back that time, market might move sideways. All standing instructions are all given over here. So now after that you see lot of red color bars over there. Okay.
Yeah.
Any signal on the red color zone is to be avoided. We will not attempt it. One should not attempt it, and one should not do it. And we will also not send the calls in stock futures. In Nifty and Bank Nifty we might take chances, but in this we will not take chances because there is no sluggish movements. So sometimes from that we might miss the big good move also. But as a method, we are saying that we will not do the many red color bars in this particular manner. Okay. Sometimes, like say if you see market in ICICI Bank chart, there is too many blue color dots or re-entry cells were there, but practically none of them would have actually met the targets, more or less. The signal came over here at 20 almost at a profit booking alert. So again there was no point going for that call. So and after that movement was sluggish, you can see mixture of red and bar, many sell signals, but actually the price was not falling that much. If you look at the Bharti chart today, market in the morning it was in the red color signal, but because it was in the red color signal, we would market already fallen down. So sometimes calls are not given because it is already gapped down and red color bar was there. So not there. So technology, the method over here is that as per this is that try to avoid any buy signals which are there below the line and vice versa. Sell calls above the line to be avoided. Now one exceptional rule sometimes, so we say that if now in this case so it is not there, let's see this is some backdated chart and I'll get an idea. This is also not there. Now let's take this Tata Motors backdated chart. I will just do to get an idea about what I want to tell you. Sometimes this red color dot we take a sometimes if there is market is falling too much or rising too much, and then there are a lot of profit booking alerts are there. Okay, so in on some rare cases you might take the chance, but generally on the SMS we are not sending. But for traders who are watching and doing, then that's an exception rule that if red color dots are coming, and after that you are quickly seeing, now this is far off, but after that you are seeing a red down arrow sell signal. It is but it is after a long time, but quickly after some time it is coming, then you may take that sell.
Okay.
After the red dots, red signal comes immediately after few bars, not many bars, few bars, then you might take that risk of selling, even if it is above the bar, above the trend line. And in case like suppose in this case any buy signals are coming, then see to it that it should not be in the red color signal, like blue dots coming and then you signal, but it should be in a black bar. Then we may attempt that if you want that buy signal. Sometimes they can give a very advantage. Now market fell by 200 points or more than around 200 points 50, so that's why there was no respite. But generally what happens is whenever there is a red color dot or blue color dot and a buy signal comes quickly, then there is some kind of a trading up move is seen. So we have to follow the target and stop loss. Everything is given over here. Running stop loss is there, trailing stop loss, everything is there. Support, resistance for the day which are there, and trading. Now just from a bias point of view, if the price is below the CP, then the bias is down. Okay. Of the yeah, CP is basically equilibrium price center point, basically equilibrium point based on yesterday's price movement for the day. Okay.
CP is basically the equilibrium price.
To add further, open is very important. Once suppose any stock which is the open, say for DNF is 135.60, especially when there is these kind of gap down openings are seen, that time this logic helps actually to get you a market perspective. If market is trading below the open
Okay.
and below the previous day's closing,
Okay.
then the intraday bias is down.
Okay.
And suppose somebody who is not following any system, just having some trade, if you are trading some room, the market is trading below the open and previous day's close,
Okay.
then the intraday bias is down. The traders can sell with high of the day stop loss, whatever is the high of the day stop loss, or previous day's close, whichever is higher out of the two. So in today's market opened and traded below the open. So even if as a thumb rule of a logic in such kind of market behaviors, anybody in the morning, it becomes sometimes very difficult to sell psychologically. So, but if you remember, the risk can be higher because there was already a gap down move. But when those who understand the risk, then if they want, they can take the risk actually, or they can have the bias of the market and they can depend on signals which are coming on the other chart. Because you know the market is trading below the open and trading below the open and previous day's close. So broadly, till high or yesterday's closing, whichever is higher between the two is not crossed, the bias for the day will remain up till the supports are not tested. Now if the supports are tested, that is S, supports are tested and then there is a recovery, then unnecessarily you should not sell. But if the supports are not tested, and then you can still have a chance to sell. But we should not sell if all the supports are coming and then you are selling on the rise. Because the recovery is coming, then don't sell it from the support level. Unnecessary. This is a thumb rule of trading. But you have to follow the signals which are there. The bias, like say for example ICICI Bank, traded below the open and previous day close, the full day bias is down. Okay, so you know that, you understand that at that time, then you may actually take re-entry sell signals like these also, which were there at that time. So in that case, if anybody was taking the re-entry sell signal, that time the stop losses would have been, say this particular bar, RSSL would have been 819.50. So 819 sell signals were coming around 812 something. So you know there was 6-7 rupees risk, and ultimately what happened, if you had taken the trade, stop loss would have not been violated a full day and you could have got an 800 rupees on the downside of the maximum. And what was the support levels? 813 and next was 773. So you may be hunting for 773 during the course of the day, but still at any point of you are exiting because you don't want to carry position, then you can still be in a position of a profit. Now let's take the TCS example. TCS side of swing. What is TCS? Okay, now you see in the morning TCS open. Let's check first as a thumb rule kind of a thing, then we'll come on to the signal explanation. Over here in the morning, TCS opening 38 and CP was 1834 and open was 34. So you know, if trading about 38, the bias of the TCS movement will be up. So in that case, we will be checking the low of the day stop loss of yesterday's closing. So low morning would have been around 18.6, and your trade would have got started. This buy signal which was there, especially in the morning at 9:45 buy signal. You could have taken that because you know it is above the CP and it is above the opening. That open today was 1838. So it was above the open. That time the target was by targeting 41.52 on the upside. and we have seen it actually rallying towards intraday rallying towards 69. Because once your position is taken here, for you, important is the stop loss and target. After that, whatever the signal comes, it is immaterial for you.
Yeah, yeah.
Okay, now suppose in this case, if you have done the morning signal, then there is no issue. You are holding on to the stop loss and waiting for the target. But suppose in between, you are going to a slightly tricky situation because it was below the average. If you are looking at the bias throughout the day, you could have an idea that the market is trading above the open mostly, and TCL above 1 and above this CP. So you may also sometimes it helps find this also like in this below. So these things will come with practice by watching it, but initially these are things like suppose you may how to avoid signals is important because when a performing signal is coming, it will help and to get into the right trade. Yes, bias is positive, so you will probably look at the sell signal till all this time and concentrate on the buy signal. Suppose the next buy signal came at 18 by BP was 1850, and that time the targets was about 1864 and 68. So it did a high about 67 point, almost did it. The first target was anyway at 10. So you may have got to take that trade also in case of TCS. So bias will help you to get a direction in case of extended up and down moves on an intraday. Because sometimes when extended down move comes, then we feel that okay, now market is falling, what it will fall. But your job will be still to look for sell signals whenever the signal comes. On this chart, to put it in a simple way, do sell signal below the trend line and on the black color bars. To summarize it, trade sell below the red color trend line, and if the color of the bars is black that time, then take a call to sell with SL stop loss or even price with RSSL stop loss.
Okay.
Same case in the up section in the buy. If buy signal is coming with a re-entry, buy signal is coming, then it has to be aligned and it has to be in black color bar. The color of the bar has to be black. So if that is coming, then you go for long with RBSL stop loss. Now when a green arrow is coming, our buy, and a green arrow is coming like this in this case, then you have two choices. Then you can keep CBSL stop loss or RBSL stop loss. If whatever is a closer one, you can take that because you have to minimize this. Okay, so accordingly, so you may have this kind of trade. But TCS was Tata Steel was one such thing that morning signal, everything went to. And in the morning you are asking about the query whether to sell on the second target again or not. Preferably will be some lag in price movement because it is under transmission. So and our price data which comes from the vendor, it will be approximately 9, I would say sometimes 10-second lag. If there is a very fast movement, then there is some difference in the price on your actual terminal and over here. But if the movements are normal, then it will be approximately around the price, somewhere around the price. But if the second target is before, you could actually execute the trade. Mostly it is the avoid signal. Then don't implement it. Whether it is coming on SMS and then you find actually trying to implement it is below, then you may avoid it. And in this case, if you want to do it, then check whether where is the support first. Is the support level is attained or not, and if support level is yet to be attained, then you may look at the RSSL at the stop loss that time and try to trade if you want. But idea of the method which you are laying down, second target machine target is come, then we will not like to take any positions on that second target or first attained. So because the time to cover a trade, there is a fast movement and sometimes you are not able to implement it, especially sometimes like the software stock like TCS and all. In some single bar there are big movements sometimes. So like closing the RPITL 293 and 300. If such a bar movement comes in well, then there is some difficulty. Like when in this bar, the price was 131 and 133. So by the time you are implementing, it might be next bar was 134. So you may have implemented at 134. But you have to remember that when you are implementing at 134, say DLF, then you have to check that target is attained and exit. There can be a fractional delays in time because of the transmission delay of the screens, and some minor delay in the price charts from the vendor, because again it has to come into the software. There will be some fractional lags, and this is as far as the brief demo about the screens are concerned. And which to avoid is the most important. Any signal on the red color bar avoid. Don't trade. Any signals opposite, in the sense that above the trend line, sell signal avoid. Below the trend line avoid. So what happens is that though you might see many signals in the chart, but practically they are immaterial for you. Firstly, because if you are already done first signal and you are taking into the trade, then you don't need to look at the other signals, because you have to wait for your stop loss or target. Secondly, if so one should not accept this buy signal like this, or even the buy signal like Bharti, or even the buy signal like Tata Motors buy signals. These will not be taken actually to implemented, because they are below the trend line. So by doing this, you are adding a lot of signals and reducing your trading effort. Say Tata Motors sell was given today based on this re-entry signal which came at 293.94 around this particular. So by the time 93.40 was this one, and then we had a profit booking alert. And the alert came, and the target one was just first time when it hit, the target one was actually about to get missed by 10 paise. So then, and target one came at 289. Then we send a message saying you want to take profit for first target, revised stop loss to past. Those who are doing multiple lots, and then as the case may be, take profits also, because profit is important. See, the blue color dot alert also had come on this particular chart, Tata Motors. So that was the trade we had given in the morning for Tata Motors.
I exited that trade. I
So
asked that question only because of that reason. I sold that at
okay.
and yes, I was at 88.
88. Okay.
So I get profit of 3 rupees.
See, now when the system doesn't perform the best is to be understood also. The system doesn't perform best when there is something like Tata Steel movement has happened, something like Tata Steel. Okay.
Yeah.
And if there is quick spikes are there, there was a buy signal and there was a sharp fall immediately.
Yeah.
Within the shortest, the spikes are coming very fast. A signal of buy came, so as per the system we provided the signal, we gave the SMS or gave the message, and immediately vertical movements are coming, opposite direction. So when there is too much of movement, so we have the red color to avoid the signals. So maybe in case of ICICI Bank, today ultimately if the morning signal was done like the re-entry buy, then it could have been okay, take the benefit. Afterward it was all sluggish movements and the signals were not on the black bar most of the time, and they were almost the ICICI Bank, even the signals like Bharti Airtel were all coming in the red. So it was almost pointless to give pause or trade also. So it to avoid. So anyway, if you watch and also sometimes like these, then it is to be avoided. Objective of giving the screen to watch, you know what exactly we are also doing. So it is not just what we are trying to give SMS is just for buy sell, because some days it may not provide the best result. So you are visibly seeing it what is happening also. That is why also, and sometimes those who become over a period of time, some people who get accustomed to it, watching it, then they might sometimes trade beneficially because they know the risk-taking abilities and capabilities. So sometimes they can trade best, as example DLF. in the morning, somebody would have done, he would have got 2 rupees at least in the morning. From here, if I'm looking at signal at below 130 to 60, and low mid was about 30.30, so still you would have got on a single lot about at least 2,000 rupees or 1,500, 2,000 rupees in that range.
Yeah.
So with practice and watching practice, then you will actually get an idea about it, and so that way it is that generally these movements today as for these charts which were there was not corresponding with the market fall. These charts which were there today of 6 charts were not corresponding to market any fall. In fact, they were falling less. All these stock charts which you are seeing today, or even the Nifty, even this Reliance and SBI, they were not falling that much proportionately to what the market was falling today.
Yeah.
So therefore those opportunities, because in this technique we cannot change the chart every day, because we have to go by the signals, and when we go by the signals, then we have to see to that our sheet is also managed and managed well, and see to that at the end of the month they are showing profit, though it is in a hypothetical way, because practically the results can be slightly different to person who is actually implementing it. So these would be there. So right now what has happened is that now after some trended moves in Tata Steel last 2 days, Tata Steel gone sluggish, and ICICI also not willing to fall that much proportionately. As TCS also had a nice upswing downswing today, but Bharti Airtel also was not falling comparatively to the opening. So you are not getting the range of downside in these charts today and corresponding to the market fall. So that is why there were not many opportunities comparatively as far as this chart is concerned. So this is basically a complete orientation and a brief strategy discussion also, how to use CP, how to use open to get your bias, how to so that you can idea how to use the re-entry sell and buy signals. In this case mostly re-entry sell signal was there. So good example today was a Tata Motors sell, whereas not so performing signal was Tata Steel. More or less price was there and there, so that was not a performing one. Whereas in DLF also there was a good opportunity, and then the buy signal was an example to not to implement, though that performed. Actually 3 rupees or 2 rupees you could have got still, but from the rule point of view it is not to be implemented. Plus there was also a red color dot which also suggested to take profit or exit position also if you are long, and then you had a down move, but by the time the down move started coming in, the day was about to get over. So if the morning, if you buy before 12 you get good signals, then there is a good chance to get profits. Say for example Tata Motors morning sell call came, then you had the opportunity to take profits. Otherwise what happens if it's coming after 12:30, 1 o'clock, then sometimes it might be difficult actually to get profit the same day. It might run into the next day. So earlier you had done one SBI open carry forward one position. So sometimes one has to be very careful with the signals which are there to take a position overnight. From a trader's risk angle I am talking. Sometimes you get a very good advantage, but sometimes you have to remember the risk also. So preferably try to see that don't try to take any of the chances by taking overnight buy positions or sell positions. So sometimes it can be difficult because the stop loss might be 2 rupees or 3 rupees. Okay, but if the gap down was 5 rupees, so then those things can be difficult. So but generally, so from a SMS point of view, you may try to even if it's at 1 o'clock, 2 o'clock signal, then see to it that you try don't unnecessarily forward the position generally. So from a risk point of view. Otherwise, sometimes we have seen that a gap up or gap down in our favor might give very good profits, more profits than the target which we had desired. So that time it is an advantage, but one has to also understand the risk actually. So understanding the risk is most important, because when the day is not good, try to see that the profits are not eroded substantially. So therefore, as I mentioned earlier, try to do one trade at a time or 2 trades at maximum on a different stock, but preferably one is okay at one time, so that you know that even if the trade goes wrong, there is not much hit if the trade is not in our favor. So this is some presentation is there about this, and any other further queries we can take it up later again. Any questions?
No, sir. I understand that
I
very
will-
well.
Because intraday is very high risk. And if you see our stock, we'll take up that session again later for the Excel sheet, because Excel sheet sometimes provides an excellent, like say for example, we had a shortlisting of uptrend for Sesagova today, and there was Sesagova in the uptrend, and as per our criteria, and there were USD INRs were coming, and Sesagova actually gave you an opportunity to buy at CP and L3, and in intraday it rallied actually in a very bad market condition. It rallied up, and we would have got good profits. Anybody trying to sometimes as far as the intraday can be, you have to intraday systems and calls are as per intraday price movement. They don't have anything to do with what is the overall trend of the market or overall trend of the stock or what it is. Sometimes the major trend is down, but there can be a buy signal and that can perform and give you intraday profits. So the intraday system is completely for intraday. There is nothing to do with the overall trend of the market, because the life of the signal, these trades are run into the second day, because if the call is given after 2 o'clock or 3 o'clock, around 3 o'clock, then the call can provide profits next day morning or next day. Or sometimes what happens, in our calls are open, and if the targets and stop loss are wider, so one target attained the next day morning, call given around 2 o'clock or 3 o'clock, first target attained, second target attained in the morning, and the stock keeps going up and up, and then the third target attains by mid-afternoon session. So very rare cases it goes into the second day. It is maximum it can last is 1.5 days on the best performing signal. So there is no point actually looking for carry forwarding positions, because it is based on first of all 5 minutes chart. So 5 minutes chart is intraday, and the time frame is so small that you cannot actually look for wider degree of trends for this. So one has to understand that also, so that you don't you know the risk very well, what is the method going about. Objective of talking and providing all this system is that because somebody is taking just purely SMS, we don't want somebody to say that okay, it is purely on stop loss and target is good, then performing good. We want to show them that we might be good, we can be best, we can be average sometimes, but we are going in a methodical way. This person wants to see what we are doing like this. So it is a very transparent way of communicating things where systems are made. So it is for that advantage. So you can actually get this advantage. So anything is there, then we can talk it about. And there are certain that trended things we have to cover. So maybe there is one more or two people are there. So they also want to say, that is why I am trying to coordinate everybody on the same day. So it is not repetition again. So that is why. So that those Excel sheets are excellent actually things. Like today, in fact, we had a contra sell on Tisco for the pre-market today. So if you are actually contra sell signal, we would have got contra sell on Tisco and JSW Steel as a contra sell today. So those are also very good opportunities and pre-market preparation actually for what to trade. But now since we are talking about intraday, it is completely intraday. So any other questions on this intraday question, then you can talk later on, you can ask me as a time as you go about and watching it.
Yeah.
Okay.
If I have some question, I will mail you.
Yeah. Okay. Thank you.
Okay, sir. Thank you, sir, for your nice presentation.